I've got Yves Andre Graf, Miller Cole, Tyler Rowe sitting in the chair here. We haven't talked since the MSTR strategy earnings call that happened last Thursday. Thanks for popping in, and make sure you guys subscribe, hit the like button, share all your comments and questions for the panel today. The three of us are going to be locked in here till the top of the hour, and we're recapping the week that was. First of all, what did you guys make of the earnings call? Yves, I think I'll start with you. We were talking before the show that maybe it was a little bit more of a subdued earnings call, but did it get you bullish? And how do you think strategy moves from here?
Yeah, no, I thought it was a very interesting earnings call. I mean, they all are. Just this one felt a bit different because you can feel that there was a change in the communication from Saylor and the management, I think, in general. At least that's my perceived view. And it looks that they're trying to cater to a different audience, just in general, right? I felt like the strategy call was a bit more sober. There was less of these Sailor quotes that you can clip later and then people's like repeating. This time there was nothing said that was really like extravagant in my opinion. And the reason again is because they're trying to communicate, I think, to a different audience, and they're really trying to probably move to some extent from these Bitcoin core maxi and Bitcoin audience to maybe a more TradFi audience as well. So trying to incorporate that as obviously strategy evolves in the way that they do things, right? And also just going back to their strategy shift, and I'm sure we'll talk about it. I don't want to go right now into detail, but basically I think all is commingled and it made sense overall. But I think it was a great earnings call in general, very well communicated by the team as usual. So yeah, I let Miller go with his thoughts as well.
Oh, there we are. Yeah, so I shared Eve's sort of sentiment. It was definitely a lot more relaxed, less hypey, a bit more back to basics in terms of how they approached it. And I think that was right. I think it's sort of like going hand in hand with what we've seen in the last few months. I think we're watching in real time the company mature from what was a Bitcoin accumulation monster to now an active capital management sort of regime. And that's not saying that they won't obviously continue buying Bitcoin, which we'll touch on later, obviously with Stretch getting back to par. But they're starting to really go back to basics in terms of like what is working for the company, what's important for the company, and they've came to the conclusion that is Stretch. Like it was basically an earnings call for Stretch at the end of the day. It was all based around that. It was how can we get Stretch back to par, and then even afterwards, Fong, Lee, and Michael Saylor were putting out tweets saying our number one objective as a company is to get Stretch back to par. So they were clear with where they want to be. I think what was really positive about that is it was giving a signal to the markets, especially surrounding Stretch, that management were fully set on getting Stretch back to par. Like there was no ifs, no buts. Like they were set and they were very deterministic in a way that it will get back to par, no matter how they do it, what tools they use, etc.
Yeah, I think that's a really good point. It was really a stretch make a call. I mean, that's what we've seen more and more this year is that that is the focus. That's where they've been able to just suck up a ton of capital to buy more Bitcoin for their balance sheet. And yeah, I mean, the engine works when Stretch is trading at par, right? When it's trading close to par, and they can ATM at over $100. So um, yeah, like an interesting point I think Saylor made. I mean, it's an obvious one, but during the earnings call, he said, we could get STRC back to par a lot more quickly. We're authorized to buy back, $1 billion worth of shares. But they took a little nibble at it first. This week they followed it up again, sold some Bitcoin, bought back STRC, and yeah, I mean they're kind of proving the point. It is moving back to par. I think the shareholders. Um, have a little bit more confidence that it's going to return to par if they keep buying back some of these shares. They can kind of you know tune that fork on the supply side of outstanding shares. So yeah, it's I think I think they're managing it well. I think it's right to be measured in the approach to these buybacks, but I do think the buybacks are in order, and it makes sense that the way they're doing that is by selling some Bitcoin alongside beefing up their USD reserve. Speaking of the USD reserve, what do you guys make of, I guess, the assertion by Saylor and Fong that 2 to 3 years is what their institutional investors were saying is the right amount of runway. What do you guys think about that? We've talked so much about it on this show. I think 2 years is plenty. Some other Chase I know was advocating for a longer USD runway, but they've been able to replenish the reserve super quickly. Is 2 to 3 years the right thing? I mean, certainly if institutional investors are saying they want to see that, I think it makes sense that strategies, taking it seriously.
Yeah, I think it absolutely makes sense. I mean, as you point out, right, at the end of the day, it's just to give a confidence to the investors of STRC, right? Again, you're not catering to the Bitcoiners who probably are, less. They're not as susceptible to have the USD reserve as a focus, right? But if the investors that are investing in STRC say, "Hey, this is what we want," then I think it completely makes sense. Obviously, again, as a shareholder, you see what the cost is because all of this cash is also a drag, right? So it's definitely an expense that you're incurring as a company and especially as a shareholder of the common. So am I super happy about having a huge cash reserve? I think it could be optimized, but at the end of the day, if on the long run we get more Bitcoin because of it, right? Then sorry. And because of that, then you get more Bitcoin. So then it's obviously like the right result, right? At the end of the day. So yeah.
Yeah, I'm not really much different to Eve on this one. I think we were both pretty much in agreement in earlier episodes that around 2 years was optimal for us. Like, what is it like now? 2.3 years, I think it went up to. Like, yeah, fair enough. They were clear, like you said, Tyler, on where the institutions want them to be. They could probably go to the upper end of that, go to 3 years just for a bit of safety. But I think overall it's looking really strong. It's only really just reiterating what we've been saying the last few weeks in terms of the way they're going with the balance sheet and trying to turn it into a proper fortress balance sheet. Of course, it adds to the total net reserve again once we take out obviously those senior claims and stuff. So at the end of the day, I think it's pretty much good all round in terms of for shareholders. And we'll obviously discuss buybacks in a second, but it's obviously having a positive effect in some regard to Stretch also in increasing confidence in the market.
Yeah, definitely. I mean, right now they're at 2.3 years of duration on that runway. So yeah, it's it seems likely that they're going to go to that high end, right, and just build it out to that 3 year threshold, and then maybe take a step back. Hopefully, Bitcoin's price is rocketing, or the common equity price is rocketing, or STRC is finally back to par, and they can kind of nail that down. Um, and Saylor kind of, I guess some of the language did shift, before we get into the buybacks a little bit further, is that, I think in the past, the team at Strategy have been really leaning into that STRC is, a low vol product that, if you've got like a short time horizon, a 1 month, 2 month window, that it's the right type of product. I guess they kind of backtracked on that a little bit and said, maybe if it's, a multi-month project, you don't need your money for 6 months, for a year. It makes more sense. Do you think they're still finding their legs around the messaging on this? Does the market care? I think, maybe from a risk management perspective, it makes sense not to tout this as, something that is more than it is, or promising any types of guarantees. Of course, anytime you're investing in an equity, even if it's a preferred equity, that's targeting low volatility, there's obviously risks. We've seen those risks come to fruition. Do you think the management regrets, guys, any of the language around STRC before? Because it doesn't seem as strong now.
Yeah, I think they do, and that's why they also changed the way that they communicate, right, on the in the quarterly earnings, because I think they were a lot more careful with what they were saying, and the way that we're saying everything seemed like more, yeah, meticulous. Like, honestly, it's not the usual Sailor that we usually have, who likes to. I mean, he went on a couple of rants, obviously, but I felt like it was a lot more calculated, the way that he did it. Sometimes he lets himself a bit more loose, and this time it was less of that. I think it's the change of the whole strategy as well, right? Now that they're not only just holding and buying Bitcoin, but now you have this active management going on and everything. So I think they need to also be more careful, because this also can quickly like attract even more bear narratives and all of that, because the whole strategy is more complex as well. So yeah, and yeah, just in general, I think they're way more careful.
Yeah, absolutely. I think like when we look back at those, like 2, 3 months where Stretch was at par, Sata was at par, like the whole digital credit narrative was at its peak, at least like this year so far. There was a lot of hype around it, and I guess like I got caught up in it as well. Never felt like it was ever gonna leave par again, really. And obviously that got taken apart. We had like we sort of spoke about before, like the hype videos and stuff, which didn't go down too well with a lot of people. The AI sort of like slop videos weren't exactly ideal, so it's definitely a big change. Eve, what you're talking about there is very true, and I think it's the right way to go. Like at the end of the day, they want this to be an instrument which is held by institutions. I'm not sure what the likes of BlackRock and stuff will think of AI slot videos. Really against like what's meant to be like quite a serious innovative product. So I think they're doing the right thing in terms of taking a more institutional approach, less memey, less retaily, and instead looking and trying to get like some proper like serious backing behind this instrument now. And again, like what the other last week or so, we hit a year of Stretch. So we've now officially had that year. I think they'd be happy with what it's done in terms of it's what like accumulated over 100,000 Bitcoin or so for them. Like that's fantastic. But again, we're trying to get it back to par. Let's get serious again. And I think Eve, what you've been saying is they basically rolled their sleeves up and said, yeah, this is a bit of a mammoth task for us at the moment. We're going to have to take this seriously.
Yeah,
Yeah.
yeah. Go ahead.
And I think not only Sailor, but I think just in general as well. I take part of that as well, because I feel like at some point, as you point out, Miller, during their days in May, I was even saying, do we even need a third layer, right? Because it was always holding at par and all. And yeah, obviously this is very humbling for everybody, not just the strategy, but also us commentators on it, right? So definitely taking a step back as well now with my communication when I when I actually post something online.
Yeah, definitely. Yeah, I did want to reiterate. Of course, there were MSTR common stock shares that were sold at the market this week. I think I might have misspoke on that earlier, but the net proceeds from the ATM were $290 million. Just to recap for everybody, and the Bitcoin sold, the 1,600 plus Bitcoin were aggregate sales of 104.7 million. So they bought back, basically. What was it, 81 million of STRC. What do you think this was the right time to do that? Are we going to see this in the coming weeks if STRC, continues to kind of just grind upwards? When's the best time for them to deploy this, Miller? Do you think it's, if STRC week over week is down, do you think anytime it's below par that they should at least signal that they're buying this back?
Yeah, I'm sort of like in the mindset that like going forward, when it eventually hits par again, they'll still try and keep that sort of like credibility signal going. But like they don't want to ever see what happened a couple months ago again, because I don't know how well the instrument would survive a second time collapsing off par so dramatically. So I think like if we're looking really far forward in terms of like once it's hit par and stuff, I think they'll keep the signal going. In terms of right now, um, I think like half the thing, well, most of the thing, as we were talking about before the show with Stretch, isn't about the buybacks themselves. It's just about the signal and the sort of, does the market think that they're going to buy back? Does the market think that the support's there? And it obviously does at the moment. Like we've just recently, I think we've dipped down a little bit, but we crossed $94 just a couple hours ago or so. Um, and so far, like if we want to actually speak about Stretch in terms of like the mechanics behind it, as we said before the show, they've only brought back only about like 1% of notional preferred outstanding, which is incredible when you see it like the actual price movement we've seen. We're like 8% up since that original like $86. And I think like the blended price when you put together the two buybacks is about $88.40 or something. I looked at it. So even then, like they've essentially sent Stretch up 6% by only buying back 1% of notional. So if you want to look at like a successful move, I guess a good use of convexity, this is it. Like it's completely disproportionate. It's beyond what I would have expected the reaction to be. Um, so essentially the point I'm trying to make is like it's not really about the buys, etc. at the moment. What they're trying to do is use as little capital as possible because of course, like Saylor said, they could just go buy how much do we have left now? Like $893 million left of the authorization. They could go do that tomorrow. Stretch probably would get back to $100, but they've just burnt $893 million. So at the end of the day, they're trying to preserve capital, keep talking as much as possible, keep that credibility signal going, and then try and use as little capital as possible whilst also giving that signal going forward to get Stretch back up to par. At least that's my take on it, Eve. I don't know how you feel about this bit.
Yeah, I'll jump in. I think you're right, Miller. Like if they expend too much capital for these buybacks too quickly, like people shareholders of STRC are just going to call for more Bitcoin sales, which kind of negates the whole strategy, right? If you're funding this, at least partially through Bitcoin sales, like then you run into some real trouble at keeping all the cogs in the wheel kind of turning. So I think that's like the big thing to take away. And Eve, I'll let you kind of share your thoughts on that as well. But yeah, I think they just need to be measured. I think they're fiddling with the dials. I'm sure they're running some complex calculations, but at the end of the day, shareholders, investors, even the shorts who are looking at this thing, probably everything moves. Everything moves the way it's intended. It grinds back to par, when there's a measured, careful approach. And I think probably seeing them doing these buybacks has cleared out some of the shorts.
Yeah, no, it's very well said by both of you. And there's maybe two things I would add. And just coming back to what you just said, exactly, I think it's Richard Byworth who mentioned, right? Just having the mention that you will be able to defend, in this case, STRC's par by buying back, then you're scaring off the shorts, right? So that's the first thing. So that's what they're doing essentially. And the second, I think they mentioned it in the earnings call exactly, that they don't want to buy back or bring it to par that fast anyways, because it's also opportunities that you're taking away from the traders or the people buying STRC, right? Because right now as a retail, you have a great opportunity to step in and buy STRC at $93, and you know that they're going to keep trying to put it to par eventually. So it could be a great opportunity for various stakeholders that enter into STRC as well.
Yeah, it's actually sorry, Tyler. That's a great point, Eve, which you picked up there, which we didn't mention, is that Saylor essentially said clearly that like he's not bothered by people shorting, people um, playing with the options chain, etc. He was like, go ahead, have your fun. Inevitably, we'll get this thing back to par. But he said like he's got nothing against people like actively trading Stretch, actively using it. And it's sort of like even a few months ago when we were at par, there was still open talk about, and I think it was the same I heard on True North or something with Sata, is that there will be people trying to arbitrate it, even when it's coming off par by little bits, like that one penny difference, etc. Like this is always going to be a feature of the prefs, I think, going forward, because I think that opportunity is there. So I think Saylor like sort of signaling like, yeah, go ahead, is sort of like a nod not only to like those sort of people you're talking about, but also like to the institutions who will inevitably try and do stuff with the like shares they hold, etc.
Yep. Yep. That's a really great point. And yeah, STRC performing again, like you said, it tagged $94 today. It's driving up. I'm taking a look at SATA. Strive. The other side of the coin. They've got that similar product with SATA. It's still struggling to regain par as well. It's at 97.60. It's been, I would say, largely flat. It's chopped around. It dropped below 96 a week or two ago. It charged up and closed above $98 in the middle of July. But yeah, I mean, I do wonder what it takes for SATA to get back to par. They've not shown a willingness to sell Bitcoin like Saylor has. I don't think because they've had the need to. And the same, I look at their SATA product the same way as they're not going to announce buybacks or a buyback program necessarily, or start doing buybacks until it really necessitates it. If they're struggling to regain par, but they're at $97, $98, do you think that's fine? After how long of remaining below par do you think it's pertinent for the team to come in and do something different, to shake things up, to maybe initiate some small buybacks if you're in Strive seat?
Well, I think it's simply, at least in my opinion, only strategy can really use this sort of strategy. This is the beauty of their capital stack and the fact they had the first mover advantage, and they've got what, like 840,000 Bitcoin. Um, they have the flexibility to be able to go and sell what, like 1.6k Bitcoin, and it only be like, I don't know, like 0.2% of their stack or so. Like, it's completely ridiculous when you look at it in percentage terms. Yeah, it can have such a big impact in terms of how they can sort of use optionality to shift around and, as you said, twist those dials and stuff, Tyler. So at the end of the day, like, maybe they will try something, but I just can't really see it because what, Stripe had like 20,020 Bitcoin, I think, as of yesterday. Um, and you're like, you compare that to strategy, it's like, I'm sure the Strive team will have something up their sleeves if we don't see any like, I guess like big moves coming soon. Because even though it's up to date, like if you go back to, I'm just looking at the chart now, if you go back to like sort of I don't know, a couple of weeks ago or so, it was almost tagging $90, and now it's at about 97.70. So maybe it's just a narrative thing at the moment. Maybe Stretch is just taking the narrative a bit at the moment with the buybacks and stuff. There's a bigger discount there for people who want to buy in now and get it back to par. Maybe traders who are sort of stuck between the two again, while Stretch is further away from par. Management is actively buying back. Therefore, I'm happy to jump in on this. It's just me throwing it out there, but yeah, it's a tough one for them. They've innovated a lot already, and we've discussed this a lot. They've got the zero debt, they've got the daily dividends, whereas obviously strategy had like a sort of disadvantage in that regard. But it feels like the narrative, I guess, has shifted slightly, and a lot of the focus is being put on Stretch. That may possibly be why, but yeah. So overall, it's just, I think, a matter of balance sheets and balance sheet sizes at the end of the day with strategy, especially.
Yeah, I think it makes sense. It was interesting to hear Saylor say, if we could go back and do it again. He's alluded to this before, but he was very clear on the earnings call. You know, I wouldn't do the converts. I wouldn't do the other prefs. I'd just launch STRC and have no debt. And that's the Strive. That's the Strive game plan. Matt Cole has said it before. He said it on a podcast with me a couple times. Is we've got the balance sheet that strategy wants to have in the future, and Saylor is readily admitting that. What a that's they got to feel really good about that. We've talked about that before, but yeah, I think this was the clearest Saylor came out, at least in front of a investor audience, to say that. And I mean, they're going to pull it off, right? Eventually, they're going to get to this balance sheet that is cleaner and that is just amplified by STRC. If they don't change their overall strategic vision. One of the things that they alluded to on the call is that they might introduce some swap lines to actually potentially provide an avenue to retire some of those other preferred equities like STRF, STRD. He said, like, we don't want to buy it back because it's wait, what did he say? He said it's such a great deal, essentially, to get paid that type of thing. He's surprised that people aren't buying STRD, surprised people aren't buying STRF, STRK, and just getting great value, especially STRF secured by the balance sheet at an even higher liquidation preference than STRC. But yeah, do you think that's in the cards? How do you think investors will digest Saylor saying that he wants to, I guess, kind of potentially retire the rest of the preferred equity stack?
I think that they will do it, right? When you look at the other preferreds, actually, I was looking at the liquidity just before that. They're almost 2 orders of magnitude lower than STRC. So they're, I mean, compared to STRC, they're basically liquid, right? So there's also something there that clearly is not to the level of STRC. That's one thing, right? And also just simplifying the balance sheet, right? Looking at STRF, then suddenly you're moving STRC up into the stack, which is a good thing. But again, because of the size of STRF, probably doesn't make a huge difference. I think retiring the converts is definitely the priority, right? And this will also help if STRC is not at par by then it's going to help bring it to par to some extent, in my opinion. But I think it's going to happen that STRC gets to par before that. And if STRC is already at par at that moment, it's just going to help to issue more and keep it at par over a longer period of time. So definitely cleaning up the balance sheet is definitely an exercise that will be happening in the near future. I expect this to happen probably the next time that they're able to use basically the Bitcoin price appreciation for them, right? So yeah, it's just basically about Bitcoin price cooperating with strategy in this case, and they will start doing the exercise of cleaning up this. At least that's how I view it. I don't know how you guys see that.
Yeah, I agree. I think like we have like a lot of these like complex discussions about tweaking the dials, but at the end of the day, like a lot of the narrative will just come with price action of Bitcoin. We need Bitcoin. It's holding strong, like we said before the show, of a lot of sort of like catalysts which could have pulled it down to below 58 again. Um, but it's holding strong, but we do need some movement at the end of the day. And I think in terms of the rest of the stack, like yeah, Saylor was very clear long term. He wants to just focus on Stretch as sort of their iPhone product again. But I don't know, like the converts and stuff, like I don't think they need to be a priority right now. Like again, it is low cost of capital, at least in my opinion. I don't think it's something which needs to be cleaned up ASAP. Like there's nothing wrong with having a bit of complexity on your balance sheet. I think we all get like, and don't get me wrong, like Stripe's balance sheet is fantastic, but I think everyone can get very sort of obsessed with zero debt. And I had this chat with Alexandre Lazet earlier today, about sort of the converts on Capital B's balance sheet, and he was very much like he gave a really good perspective on it, and that interview obviously go live soon. Sorry, plugging it. He gave a really good perspective. Like not all converts are the same. Like this is all very different to each other. It's very different for strategy than it is to other companies, of course. That's why I'm saying it. But at the end of the day, like the converts, I've went on a bit. The converts are a low cost of capital. Um, Maybe that's something which gets retired when we're in the peak of a bull market, like when they've got that ability to just hit an ATM at like a 2-3x MNAV and just clear it quickly. But that's just me throwing it out there again. Like it's tough at the moment. They've got much more important things on their mind. Stretch getting back to par is again, like we said, just the most crucial. That's sort of the way I'm framing it. It's just like focus on Stretch, and all of these arguments around complexity and stuff can come afterwards.
That's right. Yeah, I mean the soonest one, the 2028 convert retires in a little over 2 years, or it matures in a little over 2 years. The conversion price on that, and they ran through this on the call, it converts at $183, and that's a little over $1 billion. You've got another one, $800 million, that converts at $150. So yeah, I mean in a Bitcoin bull market, um, like as long as Bitcoin's price has some big upward movement in the next 2 years, the 2028 convert, the first half of the 2030 converts will easily be in the money. I think the 2031 and the 2032s also will be in the money in most Bitcoin, proper bull markets. It's just the 2030 and the 2029, which have 0% coupons. So there's no debt service. It's $3.5 billion on those two converts, and I mean, they certainly could also convert if we see really elevated MNAVs again on strategy. But yeah, I think it's a problem for another day. The market said, don't deal with this now. We don't want you burning cash, at least. Maybe if strategy is sitting, somewhere between 2 and 3 years, or they hold 3 years worth of USD runway in on the balance sheet, maybe they dip in that to retire some converts. But yeah, I think it's a question for tomorrow. I think they've kind of settled how that works, how the market digests it, and they're going to have no problem as long as their stock stays liquid, like it has for the last, especially the last 2-3 years, to be able to raise the funds and retire that whenever they want.
Yeah, I think you're right, Tyler. And like a lot of the narrative around why they need to retire the convertibles is obviously that S&P Global review. Everyone sort of goes back to that as like, why would they do it? At least now, why do they want to do it? I don't know what you guys think, but at least in the short term, over the next couple of years or so, I can't see, as much as like the S&P Global have gave them the free conditions, I can't really see them just accepting strategy when, according to them, Bitcoin's a pile of crap, basically. So it's like, at the end of the day, like we can tweak the balance sheet and stuff, but if they see the underlying asset as a load of rubbish, then I don't have much hope in the next couple of years at least. Maybe it's something 5 years down the road or so, when Bitcoin's a lot higher, hopefully. But at least in the short term, I'd love to hear what you guys think of this, but at least in the short term, I just don't really think it's realistic, no matter what S&P say.
Yeah, I exactly as you point out, I think the S&P 500 inclusion is for me like a non-discussion right now. Like it's something way down the line. I think what matters most for strategy is now this S&P credit, right? So we need to differentiate both of them, right? The credit part is what they're focusing on, in my opinion, while doing all of these operations and showing these agencies, hey, look, we're able to sell Bitcoin without crashing the price. We're still able to get some capital markets access despite being in a bear market, and buying and selling of STRC, and all of this just shows, hey, look, we're able to do all of this while we're still in a bear market, and at the end of the day, I think we should actually see what is it in October or early November, have the next review for this credit rating, and hopefully we get a higher credit for strategy, right? So that's going to be an interesting one to watch, because they're basically fulfilling every point of their checklist right now, as I've seen from their report.
Yeah, and I think Eve, you're touching on it really well there. Like at the end of the day, I think when we're talking about access to capital markets, I think strategy is pretty unmatched in its ability to just raise money. Like not only does it have pristine capital on its balance sheet, the most liquid asset in the world, essentially in Bitcoin, where they can just sell it onto an open market and the price doesn't do anything because it's such a small part of the daily liquidity. On top of that, they're selling hundreds of millions of dollars lately of common stock week on week, raising this cash, increasing the cash reserve, doing buybacks. Like the beauty of their balance sheet is the optionality it gives them. And that's because of, like I said earlier, when we were talking about whether Strive could potentially do buybacks, it's a bit tougher. They don't have the optionality of having such a large balance sheet of Bitcoin where they can just sell a bit of Bitcoin, like we said literally like a minute ago, where to any other company it'd be a massive chunk of their stack, but to strategy it's like 0.1%. Like this is the optionality they've given themselves through what they've built over the last 5 years or so.
Yeah, and just to add on that, I think it's a great point that you make here, because if you think of strategy in the depths of the bear market in 2022, there's no way they would have been able to do what they're doing right now, right? I think they were they were already a bigger company but than Strive today, but they were still small, and I don't think they had the optionality that they have nowadays. So that's definitely a great point. I think Strive, despite having this great balance sheet, they don't have the optionalities that strategy has, right? So they're still, as you point out, this kind of first mover and bigger balance sheet, still kind of they're still ahead of Strive in that sense, right?
Yeah, and also like when you think on top of that, like what can Strive do with Sato really, which does include like obviously using the balance sheet like that, well, the one argument would be, oh, they can increase the dividends, but we've already learned now with Stretch that that doesn't work in getting the price up. Fongli like openly acknowledged that, saying we're going to keep it at 12% because we've learned that it didn't have any effect on the price. At the end of the day, if the risk profile remains relatively the same for any sort of investor who wants to get in it, they don't really care that much about whether they're going to get 13 or 13 and a half, at least in my opinion. So I think that like does restrict Strive a bit, but like at the end of the day, they've done everything they really can at the moment in terms of like, well, I'm sure there's more that they'll think of, but in terms of like what's immediately available and how can they innovate and try and distinguish the product from Stretch and make up for that lack of optionality.
Yeah. Do you think those moves in the hikes of the dividend rate of STRC or SETA in hindsight were mistakes or too aggressive, given that I guess that now the teams kind of view them as fine tuning, you know, knobs that they can dial. Of course, they're still going to have some effect. We just think, probably the effect of raising the dividend rate on STRC doesn't move the needle, compared to the amounts of capital that are going to flow in long term, like you said. So, I guess, did they hike it too aggressively? Doesn't matter. I mean, does an 11% stretch for the next 2 years matter compared to a 12% stretch for the next year?
That's a great question, because in retrospect, it's easy to say, yeah, it was a mistake, right? Same as when they repurchased the convertible debt with the USD reserve. But again, it's all about, it's quite a novel strategy, so they have to try things, right? And when they issued Stretch, and for that matter, also when SETA was out, they still thought, oh, the dividend rate is what matters the most for the investors. But it turns out, yes, it is an important component, but that's not the only component. And for example, the USD reserve, which Strive innovated on, actually is really important, turns out. And who knew, right? Would you have expected that back in December, that the USD reserve would be the main focus that we would be talking right now? I don't think so. Everybody's learning as we're going, and that includes Saylor and the team, right? And we've mentioned that many times before. So what was it a mistake? I don't think it was a mistake. It's just fine tuning, right? At the end of the day, and would we see other hikes? Maybe. I don't think they would be that aggressive anymore, and maybe actually on the contrary, maybe they're able to even lower it and say, hey, maybe we lower the dividend rate and then we increase something else to USD reserve. Maybe by then there's even something newer that the investors are focusing on. So who knows?
Yeah, I do agree. I think hindsight's a beautiful thing to have. I think at the time, like everyone wanted that rate to be raised, and let's not forget that they do have a VWAP framework where, at the time, especially when everything seemed to be burning and falling apart, they were under a lot of pressure to obviously firstly stick to the guidance, but secondly raise that rate to at least make it look like they weren't panicking or anything. I think like when I look back to the period, I think I had the argument at the time, trying to think back to like my thoughts at the time. Now trying to be like neutral about hindsight, like you said, Eve. I was very much in favour of them raising it simply because, firstly, it was under their guidance where the VWAP was, they needed to raise it. But also, at the time, I thought it would have shown a bit of credibility to the market, but then it would be like, yeah, we can raise it, what, 0.5%, and it doesn't really affect our balance sheet. Because our balance sheet's so big, at an extra 0.5% in terms of like annual dividend payments doesn't really move the dial that much in terms of putting pressure on them. But obviously, Eve, like you said, with hindsight, we sort of noticed that the needle needed to be moved on the USD reserve, etc. But again, like we can have said, so I don't think it was the wrong decision. I was probably at the time, I think, trying to get them to push it even higher. So there goes, like no one had it perfect at the time. It was the first time we'd experienced a proper like fallout of Stretch. It seemed like, as we said earlier in the episode, everything was fine and dandy. Stretch is going to send Bitcoin into a new bull market, and we were all going to be rich. But again, it's just a product we're learning step by step, as is management. Eve, you make an important point. Like it's such a new, not only industry but new product as Stretch on itself, but they've got no more like, I guess, like present knowledge and understanding of the product than we do in terms of like the information available to them, in terms of how it's trading, etc. So at the end of the day, like it's quite harsh to criticize any sort of decision with that hindsight.
Yep, you're right. You're right. We deserve a proper bull market, don't we, Miller? Especially you're younger in university. He needs a proper bull market. Everybody out there, so start buying your Bitcoin and your Treasury stocks because he needs a girlfriend, and his girlfriend needs girlfriends, and that's, as we know, what happens in bull markets around here, right? Just kidding, just kidding. My wife's watching this probably in the other room and is gonna yell at me after. But yeah, great advice from Tyler there. As always, I wanted to take a quick look and just kind of zoom out and get some perspective in this bear market. Strategy is trading. I think this average volume is over the last 30 days, probably $21 million, 21 million in volume, and they're among the likes of like Google, Hewlett Packard, Exxon Mobil, Meta. Like we're talking some Mag 7 companies that have multi-trillion-dollar market caps. You've got Walmart that's here that trades a similar amount of volume, and they're like an 800, 900 billion-dollar company. So again, strategy. Michael and the team kind of reiterated it on the call, is they welcome all of that volume, all the volatility. They want everybody they can building products on MSTR, because the volatility is the lifeblood behind this thing. It's certainly backed and fueled by Bitcoin, but it allows them to, sell shares into the market on all of their products when they're, you know, one of the most volatile stocks out there. And that's the beauty of it. Traders can come, they have a long-term outlook on Bitcoin, but anyone who trades their stock doesn't have to take that position. But it all piles into the ecosystem, piles into the MSTR, common equity, and its kind of derivatives. And Saylor said that on the call. He fielded a couple questions, I think, from Samson Mao and from maybe Matt Hoken, I believe, at Bitwise about, um, does it make sense to build some derivative products? Does it make sense to sell covered calls or buy cash secured puts, which is something I've mused that would be interesting to see them do. But Saylor said, right now we're laser focused. We want other people to be spending that capital. It sends a bad signal to investors, if we're capping our upside on Bitcoin, by selling a covered call or something like that, or if we're doing a cash secured put that says, they're kind of like maybe short-term bearish on Bitcoin's price, which I definitely get. I would like to see them, dabble and try to generate some yield, but their point's well taken. And at the end of the day, they are happy to see those dollars spent elsewhere, somebody else bringing them into the marketplace, and they can laser focus on the strategy. So that was cool to hear. I don't think they're going to be doing any derivatives market activity, certainly for the next year plus. So they put that pipe dream to bed for me. But what's your take of that, Eve? Is that something you just kind of expected? Saylor said it before, but really hammered home the point that we'll leave all the structured products beyond what we're building to the traders.
Yeah, so yeah, Saylor reiterated many times that he wants to have a clean story, right? A clean narrative, like as simple as possible. So definitely that goes into that sense. Although I have to say, with the actively managed now balance sheet, it feels like a lot more complex than what it used to be even 6 months ago. Now it's obviously like more complex. Not everybody is able to follow that. But coming back to these cash secured puts and covered calls, when you're doing that, just thinking in terms of the balance sheet, right? Let's say that they actually would issue some cash secured puts, then suddenly like this USD reserve that is initially for the dividend payments for STRC is doubly encumbered, right? Because you're saying, yeah, we're using it for this dividend payments, but if you're using it also for using it cash secured puts, suddenly they're being utilized in two ways, right? In two sense. So it's being overutilized in a way. So as an investor of STRC, would I like to see cash secure puts? No, because what happens if Bitcoin price now suddenly falls drastically? That means that this USD reserve will be depleted because they have to buy the Bitcoin, right? So that's one thing. On the other hand, if they sell the covered calls, again, you're encumbering your Bitcoin 2 times, right? Because that's what's backing all of the prefs. So if they start doing those covered calls and then suddenly the price of Bitcoin starts running and all, then obviously they have to sell those Bitcoins. So you're not like the Bitcoins that are backing essentially those preferreds are also being used and being sold into the market, right? So either way you see it, it's just encumbering the balance sheet more than what it already is. So for the investors, especially the preferred investors, more than in this case the common share investors, then it becomes a bit more. Yeah, it just becomes saturated, and yeah, I'm curious to hear your guys' thoughts on this one, because that's how I see it. But maybe you guys have a different view on that.
Yeah, like Tyler, I do get like the sort of like argument and why it would be like really interesting to see how they do it, how they generate income through that, similar to what Metaplanet do already with their sort of division purely for that. I think in terms of strategy, I've always been opposed to it because firstly, like Saylor himself, even at the earnings call, was like they're very like emphasized on people being able to play, like you said earlier, people can do it for them in a way. Use the volatility to sell these cash secured puts, these covered calls, etc. I don't think strategy really want to go down that route of selling these sort of instruments. And on top of that, I think a lot of like this idea behind like the selling the option and stuff is all sort of around this idea that and this main criticism of strategy where people go, oh, they don't have an operating business, Like it's probably like Bitcoin Maxi sort of argument. Sort of like, oh, they don't have an operating business, they're essentially their whole business is exploiting shareholders, which just isn't true. At the end of the day, like I'm just going to go back to what I've been saying this whole time in terms of with their balance sheet, the size of their balance sheet, how it's been carefully put together. They give themselves all the optionality they need from just using their capital. They've got Bitcoin, they've got this pristine capital on their balance sheet, which they can take risk on top of and get a return on. Through, of course, they can get income through the preferreds when they get firing. They can obviously sell that Bitcoin when it's opportunistically good for them. They can sell common shares. So at the end of the day, like there's this argument, oh, strategy doesn't have a proper operating business. No, their operating business is literally the capital markets. Like they are financially engineering capital markets to bring themselves income by taking risk on their capital. And what if we look at the metrics, like the net reserve at the moment is around 36 million once you take out the senior claims and stuff. 36 billion, sorry. That would be worrying if it was million. They have engineered it so that they don't need some sort of like, of course, like software business and stuff, but like we don't need to talk about that. I just think it goes into this like weird sort of criticism of the company where it's like, oh, if they don't have like cash flow through a traditional business, it means they're a Ponzi. Like I just think they generate they generate that capital, they generate income off that capital already through their ability to monetize capital markets. Hence why I like to call them that Leviathan of capital markets. Who else has the ability to sell this pristine capital, which we call Bitcoin, into the markets, gain what like $200 million from selling that, sell hundreds of millions of dollars of shares every week into the market in order to essentially restructure their capital structure depending on week, month on month, etc. I know I've went on a bit of a rant there, but I think it's an important point to make that their business is the financial engineering of capital markets. They are taking in traditional fiat capital and converting it into in long term value for shareholders, but also buying Bitcoin with it at the end of the day. That is the whole point.
Yep.
Sorry, rant over.
No, well said. And yeah, it's their balance sheet company, and I think a lot of the hate comes from, this Bitcoin strategy being novel, being different than any other balance sheet company. And I mean, thinking about the performance of companies that, the vast majority of their market cap is tied up in their balance sheet. 99% of those companies aren't performing the way strategy is. So I think that's like there's kind of like this hate this hater mentality out there that it's like, oh, strategy can't do this because nobody can pull it off. Maybe Berkshire Hathaway, is the only one that can, be a balance sheet company that, has a strong, yeah, effective way to manage this. They're doing it a little different, but they've been successful. So I think you're right. They've got their operating business. It's tapping capital markets, and that point was raised on the earnings calls. Someday, strategy is going to have to do something different. Because in all likelihood, this can't continue, where Bitcoin keeps outperforming, I guess, STRC, and it is such a I guess an arbitrage opportunity for strategy to tap the capital markets in this way. It could last a long time. Could be 10, 20 years, and we're still talking about this type of thing. But eventually they do have to pivot to something else. But they've got the luxury and the leisure of being able to wait that out. And as they strengthen their balance sheet, Matt Cole has said this too about Strive. We're laser focused on our strategy. We want to grow our balance sheet. We want to stack as much Bitcoin as we can, increase Bitcoin per share for shareholders. When we become one of the fastest growing companies in the world, then we can put that balance sheet to work in other ways, but we're not focused on that right now. And you can't be, like, until you get to that, there's not a summit to that thing, to that, idealized time and moment, but there will be a point where it's like, oh, the strategy was undeniable. The early entrants and the people who manage the strategy well, do hit a catalyst, do hit a moment where their balance sheet is so large that they can deploy it in even more creative ways, maybe aside from capital markets, and they've got the luxury of time on their side.
Yeah, well said, Tyler. And I think like at least a short-term criticism surrounding this idea of a lack of operating business is simply just a fundamental misunderstanding of firstly how the company works, but secondly the products which are raising the capital for it. I think like that sort of idea, which I've just done the rant on, is just a misunderstanding of what is capital and how can returns be created from using capital to your advantage, especially when you've got a large balance sheet behind you.
Yeah. And I think they are already successful when you look at it. Like they were a 1.5 billion market cap company in 2020 when they were buying Bitcoin, and now they're at 37 billion. Obviously, they went higher during the bull market. Now they crashed a little bit, but it's still all like, let's say it's almost a 20x from what they had in 2020, and that's all based on Bitcoin, right? They didn't use, like, that wasn't created through their AR or BI business. And so just looking at it from the last 6 years, they are a successful company. And if you know what Bitcoin is capable of, and then MSTR will go way higher as well. And yeah, obviously these products haven't been fully proven because they're new, right? STRC and not the other preferreds. But I think we have, it's going to be interesting to see, and I'm pretty sure they're going to work. And once they work, it's going to be even actually what we saw in the last 6 years is nothing compared to what we will see in the next 6 years, I believe, with the new products. So yeah, basically strap in, because we're going way higher once this thing starts really rocketing. I mean, we're going to go straight up. It's going to be crazy. And I think people do not understand it. Most people can't comprehend what's going to happen.
Yeah.
I don't think I can, to be fair. Like Tyler, what you said, it's like I haven't really had a bull market in my Bitcoin experience yet. All I've known is pain. So Eve, that'd be very nice if that happened, because I could actually see. Is everyone lying to me? Hopefully, I can get at that euphoria of a bull market properly. Eh?
Yeah. Miller, I don't know actually your Bitcoin story, but since when are you in Bitcoin? Have you had a proper bull market?
I obviously got like the all-time high in October, but like
Okay.
obviously it was quite an underwhelming
Okay, yeah.
one. Yeah, it wasn't like I've been told stories of like the late 2010s and stuff where it was like insane. Yeah, like I'm waiting for that. Obviously, less so with Bitcoin itself as it matures, but maybe the equivalent with the treasury companies and stuff. Hopefully, with the amplification and stuff. But yeah, I've heard a lot of great stories. I'm just waiting for that little rush myself. At the moment, like everyone I've told to buy Bitcoin and stuff, my friends and stuff think I'm mad. So Yeah, universal experience. So I'm waiting on that.
Yeah,
Yep.
exactly. So for anybody that has like actually had a proper bull market, I don't count that in 2025. It was like very like weak bull market. But anybody who has had a proper bull market knows, and I think this is going to be, as you point out, amplified. Whoever is in MSTR, in Strive, or in MetaPlanet. So that's going to be interesting. I mean, it's going to be more than interesting.
Yeah, and I think it's like one of those things where it's like if you're a company and you have Bitcoin on your balance sheet and it skyrockets, like, you could still be operating like a 0.5 mNAV. Your share price is still going to do extremely well because that floor is just going to rise at the end of the day. And Eve, you've just named obviously three great treasury companies, great leadership, and sort of led the way the last couple of years or so. Um, they're going to be the ones who get that obviously massive MNAV expansion. They get the reward because at the end of the day, all that MNAV expansion is basically anticipation of forward Bitcoin yield. So when, for example, SATA gets back to par, Stretch gets back to par, that's when we'll see those great rewards. So it goes back to sort of what we said last week when we were speaking to Grain. There's like that narrative of like once Stretch gets back to par, that's when strategy can really start pushing forward in terms of the equity price itself.
Absolutely. I think that's a great place to leave it, guys. Yeah, we're strapping in, getting ready for this next bull market for sure. It's going to be great to have you alongside us covering it, Miller. You know, from the doldrums of the bear market right now, and to come through on the other side. Thanks everybody for watching. Make sure you like, subscribe, share this out as much as possible. For all the latest Bitcoin Treasuries news, go to bitcointreasuries.net. We got Miller Cole, who's got a great interview with Alexandre Lizet that's coming up. We'll be publishing that in the next week, and maybe next time we'll take a little bit of a European angle and talk about the race for the next preferred equity in Europe. You know, Smarter Web and Capital B are doing some really cool things and maneuvering and I think jostling for prime to enter the European markets with another product that you know, taps into this desire for Bitcoin backed fixed income. So I think the potential there is limitless, and I'm excited to see how that plays out. For Eve Miller, I'm Tyler.